Great, thanks very much. Right, good afternoon everyone. The final presentation and 25 more minutes of Brexit, I'm afraid. I'm here, certainly not here to tell you how to vote, and I'm certainly not here to tell you what I think the outcome will be, because I think we've seen a big swing momentum from the Leave campaign of late, and as was sort of revealed in the previous presentation, it's looking pretty tight. What I am here to do is to try and deliver a balanced presentation about how we see the facts. Now that presents two challenges. The first is that when you do a balanced presentation, you say stuff that the Remain camp like and the Brexit camp like. So by implication, you say stuff that the Remain camp hates and the Brexit camp hates. So at some stage throughout this presentation, everyone will be annoyed. The second issue is that by trying to deliver facts, and there is a clamouring, there's sort of two bits of feedback really from the public about this campaign. The first is that there's been a shortage of facts, and I think there's a real issue with that, and although I'll try to fill some of that gap, actually I will come up short, and that is because no one can really know the dynamic of the relationship between the EU and the UK, both if we decide to leave or if we decide to remain. So there will certainly be an element of speculation or conjecture in this presentation. And the other bit of feedback, of course, is that actually the campaign has been quite unedifying on both sides. But I'll try to keep things in the realms of possibility in this presentation. Now, what I want to do is talk about what I think are going to be the major factors that are going to determine how people are going to vote. So looking at the economics of it, trade and investment, looking at migration, looking at regulation and sovereignty, trying to give you some insight and new information. I think when we put this presentation together a couple of months ago, it was full of insight and new information, but it was, you know, I'm sure you've seen a lot of the debates, seen a lot on social media, discussed it all with your friends, your work colleagues, and so a lot of this may actually be going over some old ground, but I do hope to reveal some insights and present some new arguments. And if we have time, I don't have a quiz, but we do have some investment consequences, but I'll try, if we run out of time, of course we can do that in the Q&A or in the informal session afterwards.
Just stop you there. Press no quick.
Okay. I can't do it from here.
Will this be, Colin, will this be there? So what do I need to do? Flip that way.
Okay, thank you. Survived. If we have time, we can talk about investments. Otherwise, we can do it in the informal bit after. But what I don't think, first of all, is going to determine the outcome of the referendum are the reform negotiations that David Cameron secured in his bid to reform the relationship with the UK and the European Union. I'm sure many of us will struggle to recall what they are. The only reason I sort of bring this up, I think yesterday it was revealed that the child benefit, I mean the adjustment to the child benefit policy was that a migrant was currently able to send child benefits set at the UK rate back to their home state. It's been negotiated and confirmed by the European Court of Justice yesterday that the level of child benefit that could be sent home to that home state must equate to the level of child benefit in that home state. So there's no advantage necessarily in terms of delivering child benefits by coming to the UK. The other reform that I wanted to talk about was the in-work tax benefits. When someone comes to the UK, there's been a 7-year break, so for 7 years, and then there'll be a renegotiations of the terms. Someone comes to the workforce, previously able to enjoy all the in-work tax benefits of a UK citizen who'd put more into, or a UK labour force worker who'd put more into the system, now can no longer claim those benefits from day one. There'll be a ratcheting system over the course of 4 years, and after 4 years, when they're considered to be fully attached to the workforce, then they're claiming lots of in-work benefits. Now, the reason I bring that up is because we speak to people at the DWP, the Department of Work and Pensions, and there's a lot of calculations in there. There's a lot of uncertainty about where you are in that 4-year period. You know, there's 27 other member states to determine what that child benefit number is, and so the actual technical ability from the Department of Work and Pensions to implement on some of those reforms actually may fall short. So even though we've achieved these negotiations, and achievement may be overplaying it, the actual ability to deliver on them may be overstated. And just the other thing is that we have this safeguard for non-Eurozone members. A bit of sleight of hand sometimes from the Leave campaign talking about Eurozone problems and the EU problems. There has been this protectionist element to the reform campaign from these reform negotiations, protecting non-Euro members. That looks on the face of it to be a protection for the City of London, preventing the extraction of euro-denominated trades to areas within continental Europe. And there is the right for redress from the European Court of Justice. But of course, I don't think they've been singing about this too loudly, because ultimately the European Court of Justice would be predominantly run by Eurozone. There I am doing the sleight of hand as well, but certainly dominated by Eurozone members. And there is this sort of mistrust, and I just don't think the electorate really believes that a European body would be delivering fair justice for UK bodies seeking redress. So anyway, then we go on to how the referendum, should we decide to leave, how that would unfold. Well, if we decide to come out on the 24th of June, then, well, of course, there'd be a bit of a change, I would have thought, in at the top within the Conservative Party. It would be up then to the new leadership to really take forward the arguments and draw up lines in the sand of what they want to achieve in negotiations. Now, in order to start the negotiation period, you have to submit what's known as Article 50. You take it to the European authorities, and then you have a 2-year window in which to negotiate the terms of your departure. Now, once you're on the clock, you're under a bit of time pressure, because if you can't negotiate a deal within that time period, then the UK would default to a non-deal and default to the WTO terms, the World Trade Organization terms, which are inferior to a trade deal. So, the UK is under pressure really to get a trade deal done in that period. So it's very difficult to just go and submit Article 50 and then get going on negotiations. What they want to do is to do some pre-negotiations, go to the European bodies, have some relatively informal stroke formal talks and decide what is achievable and determine what is achievable. But we've spoken to political correspondents who tell us actually the EU won't entertain those pre-negotiation negotiations, because that opens the door for other bodies to come forward and say, well, what's our route out of the European Union? So, again, not giving you any facts, but just giving you the challenges that present themselves about timing our exit from the European Union, should that be the vote. And that was only the first slide, so hopefully I'll have to rattle through these now. Let's go through to the trade position, the economics of it. I think there is from the Remain campaign, this is just sort of the philosophical positions really, I think. From the Remain side, they're trying to leverage the idea that having access to 508 million consumers is better than 65, and trying to negotiate trade deals with other trading blocs is much better to leverage off that number. The Out campaign really saying, look, we've got this trade deal within amongst ourselves, but we can't get trade deals done with the big boys because we're trying to please 27 other member states, and we can't get over the line with that. Now, one of the interesting points that Boris Johnson actually brought up himself was that we couldn't get one of the reasons a deal can't be done with the European Union and the US is because the US want to sell feta cheese into Europe made from cow's milk, and Greece want it only to be made from sheep's or goat's milk. So that does represent both a stubbornness from both parties. And we may, well, there was some modest chuckling there, but we may laugh. But these are big, powerful entities trying to protect their own businesses. It's US, it's Kraft. I think we all know Kraft, the big big food producer, trying to protect its businesses, wanting to export, as I said, feta cheese made from cow's milk. And it just sort of shows actually how difficult it is to get a deal done. So that the UK has less lobby groups to appease on its own, speaking to America and indeed China. It is still very difficult, I think, to thrash out a deal that is fair for all of your industries. And indeed, doing a deal with China, given that they produce goods, let's say steel, at uneconomic rates funded by the state, what sort of deal would we be comfortable signing with those nations? So it may be actually that trade deals just are impossible to achieve with the big trading blocs. Now let's look at some stats that we think are fair and true. There's lots of numbers being thrown around, but we've got this from the ONS, an Office of National Statistics. On the left-hand side, this is who we are exporting to. These are our customers, and this is who we are buying from on the right-hand side, imports. Now, who's the biggest single country that we export to? It is the US, but as a trading bloc, our biggest single customer is the European Union at about sort of 45%. And who's buying from us? Well, certainly the biggest, the economy that's buying the most stuff from us is the European Union again. So no doubt that relationship is very, very important to the success of our economy. Now, I'll ignore this chart for now, but this is another way of cutting and slicing the numbers. This is actually the same chart, but this is revealing to the UK exports to the EU as a share of total exports. So how much is the EU buying of the stuff that we're exporting? And it's, as I said, about 44%. But as was sort of revealed in the previous presentation, European growth's been weak and continues to be relatively weak. And that number has been coming down structurally, and certainly as an element of our success in producing goods and selling goods to Asia. So the EU has become a much less important buyer of our goods, but it's still a very high number. Now, as for what are we as a customer base of the European Union, so what is the European Union export, what are we as a percentage of the customer base of the European Union? Actually, according to the ONS and the IMF, the numbers are around sort of 7 to 8%. Now, I will come on and talk about something that Vote Leave are quite rightly leveraging off at the moment, but just to stay on the Remain campaign, there's this, it's often cited that we run a current account deficit with the European Union, and that's factually correct. We buy more from them than they buy from us. But to take it to an extreme, I run a current account deficit with Tesco's. I buy more from them than they buy from me, but I can't go in there really and determine the price of the goods that are bought. What you're looking at, I know that's obviously not the case, another piece of the argument is who is the most important to who. And if the European Union is buying 45% of our customer base and we are only 8% of their customer base, there has to be some rebalancing in our view that the current account deficit is the sole determinant of what's going to drive the outcome of that negotiations. Now, within that 8% of, we are an 8% buyer of their goods, that number is much, much larger for the, as rightly pointed out, German cars and French agricultural produce. And both sets of these camps are very, very powerful lobby groups within the European Union framework. And there's no doubt that the dominant player in determining European policy is the Germans, and maybe us second. But the German-Franco relationship, if they're aligned, that's a very difficult hurdle to overcome. So I think there's arguments on both sides, but I think we must, at least recognise the risk that a trade deal with the European Union may not be so easy as we first hoped, but certainly the economics, everyone would benefit if a trade deal could be done. Foreign direct investment. The orange line reveals that actually there's been no great acceleration from the rest of the world, the orange being the rest of the world in terms of investment into the UK, but we have seen a sharp decline in investment from the European Union into the UK, reflecting the European Union's economic weakness and their lack of funding to actually invest in the UK, and also the better prosperity from the rest of the world. Again, you can think there are complications with this number. To what extent is this foreign direct investment from outside of the European Union coming into the UK because we are the gateway to the European Union? One example is the Swiss banking industry having to do a lot of its business through London in order to be able to passport its goods into, like I said, into the European Union. So numbers, but can be cut and sliced to support both sides again, I'm afraid. Now onto the subject of immigration, and certainly a real swing factor in what's happening in their campaign. I think the narrative that's really supported by what's happening in the odds and the polls has been that the economic argument, agree with it or not, it's appeared as though the Remain campaign seemed to be winning the economic argument, and then there was a switch really from the Leave campaign to start talking about immigration, and there was, as I would reveal from this next slide, don't worry about determining the numbers, this just sort of tells us that 70% of the population want to see a reduction in the level of immigration. So there'd be no doubt when the debate switched to migration, to immigration, that the Leave campaign was going to steal some ground on the Remain campaign. And from there, really, the Remain campaign, I think, took a bit of a strategic error in sort of doubling down on this Operation Fear, attacking different parts of the socio-economic groups, and really driving marginal voters into the Vote Leave campaign. I mean, as it stands, I mean, we have sort of a bit of a digression here. We do podcasts, and we've done a series of podcasts on our website about the European referendum, and we've spoken to, for example, Philip Collins, the lead political writer at the Times, and he just sort of says, you know, actually, the Remain campaign are just not talking about immigration on purpose because they've got nothing really positive to say about it, and they're right to evade the question whenever they can. But really, this doubling down on Project Fear has not helped them at all. So what are we seeing is that, as I said, the stats reveal that 70% of the UK want to see a reduction in immigration. This is a very controversial area. Is it that they are taking work from UK citizens? That's controversial. Are they keeping wages down? That's less controversial. But maybe that, you know, lower costs is something actually that many of us can enjoy, a lower price of goods. But at the same time, many in the workforce are seeing, as we pointed out, not seeing an improvement in their standards of living, and I think that's a big issue in the UK, and is really something the Vote Leave campaign are leveraging off. Now, on terms of the fiscal position, taking two different bodies, there's the Oxford Observatory, an independent body looking at what is the fiscal impact of immigration, and they have decided actually it's neutral. They can't see a positive case or a negative case. The positive case is, you know, the immigration adds to the workforce, generates jobs, and, as I said, keeps costs down and allows for spending in other areas. The negative case that immigration puts a tremendous strain on public services, NHS, school places, transport, infrastructure, and such. And so they've left it, this independent body, as saying it's about a neutral position, can't decide either way. Now, what is interesting, I think, or relatively interesting, is what the Office of Budget Responsibility think. Now, this is a chart that they have produced, and I think it was talked about in one of the earlier presentations about the debt dynamics happening in the UK, people living longer, and the burden on the public finances to uphold the welfare benefits that are promised. So in order to help afford that, you need to grow, or this is the Office of Budget Responsibility's determination, is that in order to reduce the debt burden to help afford those, help pay for those benefits, is that you need to grow your workforce. And so with zero immigration, the debt to GDP numbers go up a lot. With our current immigration path, then debt to GDP will still go up, but actually with lots of more immigration, then the debt to GDP numbers are much more benign. Now again, as I said, there's lots of reasons that we could think that immigration is a strain on society, but regardless, this is the Office of Budget Responsibility, and if this body is to have any relevance at all, then it's going to have some influence over the policy decisions that whoever the Chancellor is in determining their own policy. So that, to us, if we do go down a shrinking immigration route, means, at least in the short term, whoever's in charge may have to start talking and preparing people for either cuts to spending or increasing taxes to help prepare the public coffers to afford this position. Okay, sovereignty and regulation. I did just want to say that I think the problem with the Vote Leave campaign, one of the issues with the Vote Leave campaign is it's not a government, and it's a coalition, and there is no set plan, and there is no, as I said, a specific goal. There's definitely some overlaps, and immigration is one of them. But there has been various noises about certain models. The Norwegian model, I think that won't work for the UK because they actually follow all the rules and regulations. Well, actually, it's determined about 75% of all of the rules and regulations, following the policies laid out by the European authorities, and actually having no influence over what happens in those policies. Actually, the rules that it's not following is relating to the fishing industry, so that's why it doesn't only follow 75% and only pays about 90% of the fees. But that's not really going to work for us. I think we would want to have a say rather than be a follower of rules and regulations. And then there's the Swiss model. They only pay 40% of the fees and have access to the free market for goods, but they can't export services, hence why I said earlier they come in through London for a lot of their banking businesses. And of course the UK is an 80% services-based economy, so we want to have that services deal. And both the Norwegian and Swiss model are subject to the free movement of labour. And I think, as I said, that Vote Leave's, the overlapping unanimous voice from Vote Leave is they want a reduction or restriction or an alteration to the free movement of labour, trying to be able to control immigration that much better. This is on the CBI website. This is the Venn diagram of the various European bodies and structures and where we currently sit. And I think this is just a loose response, not a definitive argument, but a loose response to those who say, if you were offered what you've got, if you were offered the chance to enter the European Union now, would you take it? Expecting, absolutely not. Well, I think it's a difficult. There is more to it than that argument, because at the moment, of course, we're in the European Union. Yes, we're not in the Eurozone. We're not in Schengen, so we don't have passportless borders. And of course, so that's our current situation. If you go into the European Union now, you have to be part of Schengen. We wouldn't get enjoy the rebate that we've got currently or have negotiated. And of course, anyone joining the European Union now has to be on a path to joining the euro, and I just certainly don't think we would do that. So what I'm saying is, I don't think that question's fair, and if we come out, we're not going back in, because we wouldn't accept the terms that are laid down by the European Union framework. The final thing I'd have to say is that actually there's a lot that can be done nationally to determine how your level of success and your competitiveness as a nation. There's Germany, Finland and the Netherlands that are higher than us in the global competitive rankings, and it wouldn't surprise you that countries like France, with a lot more bureaucracy, a lot more paperwork, a lot more regulations, find themselves in a less competitive position, a lot more regulations surrounding protections for labour markets. That may be something that actually you would sacrifice competitiveness to have. But nevertheless, these are national decisions. These are decisions that can be determined nationally. Jeremy Corbyn, of course, could put in a lot greater protection for workers than a Tory majority could or would be inclined to push through. So I think there's a bit more to it on the sovereignty angle, that there is. a lot of these frustrations about the poor being left behind starting to be addressed by things like the living wage. Maybe they're the right solutions, maybe they're not. What I do believe is there is still some flexibility within national policy setting in order to decide where you want to be on that international competitiveness league table. Okay, I think I've probably run my course there. Have lots to say on investment, but I think we're pushing up against our time limits there. Love to talk to you about it after or in the Q&A, but thanks very much for listening, and see you later.